Welcome back to Financial Independence 101. This is Mike, and today I want to talk to you about the banking system, the financial system, and a lot of people in the growing concerns that go along with the FDIC, and will the FDIC pay out with a systemic financial collapse, a systemic collapse in the banking system. And I'm here to tell you my opinion on it. I'm going to give you some facts, give you a little history. We're going to talk about the FDIC, the banking system, possible banking crisis in 2020. Coming up. Welcome back to Financial Independence 101. This is Mike. Today I want to talk to you about the FDIC. Will they pay in a banking crisis if we have a banking crisis in 2020, 2021, 2022? And I'm going to talk about a quick history and why the FDIC even is in existence. I'm going to talk about how much they're going to cover for you. I'm going to discuss how much is outstanding and is currently insured right now by the Federal Deposit Insurance Corporation. And also, I want to have a discussion of, will they pay? That's the big question. Will they pay? Since it is considered to be underfunded for the amount that they're insuring, a lot of people are concerned right now, will they pay? Let's get right into this. So, quick history about the FDIC. A lot of this information is just gathered right off of their page, fdic.gov. But looking at this, what is the FDIC? Well, the FDIC is a Federal Deposit Insurance Corporation. It is an independent agency of the United States government that protects you against the loss of your insured deposit if an FDIC-insured bank or savings association fails. FDIC insurance is backed by the full faith and credit of the United States government. So why does it exist, though? That's cool, it's there, but why? Well, the FDIC was established in 1933 in response to the many bank failures during the Great Depression. It was meant to, and still does, promote public confidence in the banking system by insuring customers' deposits. And in 2015, 8 banks failed, but during the Great Recession, dozens went under. Still, since the creation of the FDIC, not 1 cent of insured deposits have been lost. So this here is saying they wanted to restore confidence. In 1933, during the Great Depression, they wanted to restore confidence in the banking system. Why? So every single bank doesn't fail. So we don't see bank runs. Now you have to see the fact that the Bank of the United States, that bank failed. So therefore, they could not call the Federal Reserve the Bank of the United States, like you see in other countries. That bank failed, and that would have not sat well with Americans looking at the Federal Reserve and it being called the Bank of the United States because they lost money in that institution. You have to think about how bleak this time was in the Great Depression with 25% unemployment versus nowadays we say we have about 3.25%, 3.5%, 3.4%, right around there of unemployment, which, by the way, I don't trust that number 100% because of the way they look at it. But we're not talking about that right now. What we're talking about is restoring confidence in the banking system through the FDIC. And by the way, since they were created in 1933, nobody's lost a dollar from an insured institution. And for that reason, people today still have confidence in the FDIC and the subsequent banking system that goes along with it. So how much of your money that you put into the bank is insured? Well, it shows right here that you're covered up to $250,000 per depositor. Now, if there are 2 depositors, so let's say you have $500,000 and you add your wife, who maybe doesn't have $500,000, to your account, then you're covered up to $500,000, according to this. Now, I want to say I like to be safe. I like to spread it out. And according to this article here, the same thing goes. And it's showing here that you could have $350,000 in an institution, and you have $50,000 in checking, and $100,000 in savings, and $200,000 in a CD. That adds up to $350,000. You actually have $100,000 that's not insured. Now, other sites and other articles have tried to say that if you diversify, you can do 250 in your checking, 250 in your savings, 250 in your CD, and that is wrong. That is 100% inaccurate, because I have looked into this for a long time as a fixed income investor. I think about this all of the time, all of the angles, and the reality of this is your deposits will not be covered if you have $250,000 in each type of account. It is per institution. And I don't even trust adding my wife to it as being a way to go to 500. I'd rather just have multiple accounts at multiple different institutions. If you're trying to insure $2 million, you'd need 8 institutions. Are you following me? Now, how do you find out if one of these institutions, or your bank, or your brokerage account, or one of these investment firms is FDIC insured? Well, there's a nice little sign they could put on the door, but you don't have to trust that sign on your institution. The reality is there is actually a phone number on the FDIC.gov site. Right here is the 1-877-275-3342 for you to give them a call and find out if your institution, in fact, is insured. Now, the bank actually has to pay for this insurance. They pay into this fund, but the details on how much they pay and all of that are not readily available, but the information that they do have to pay for it is available. Now, just so you know, the FDIC is insuring 8,200 banks with $9 trillion in deposits and zero in deposit insurance fund, calling banks to prepay assessment of $45 billion. So with this, the thing is that there's $9 trillion being covered right now. So when you look at the big picture and you see what's going on, $9 trillion is sitting deposited and insured currently. And that number fluctuates up and down, and I'm sure it would be like 8.7 to a 9.4 or something like that. So this is kind of a rounded off number, but it's been pretty consistent over the last few months. Now this gets down to the big question of, will FDIC pay? A lot of people are concerned about the fact that it's underfunded and that there's not nearly enough millions of dollars or billions of dollars in there to cover the $9 trillion. They're saying like $45 billion is in the fund, or that they are funded by that much. And here's the thing, the government will pay out the FDI insurance, or we will see a systemic, complete, and total entire collapse of the entire financial system, and every single bank will eventually fail within a year. So you look from 1929 to 1933, and they had well over 1,000 banks fail in the United States of America during that time frame. And you say, okay, so over 3 years those failed, so why would the entire banking system collapse in a year? When you think about this and you think about the time frame that they instituted the FDIC insurance, back then we didn't have this instantaneous online social media, Twitter and Facebook and Instagram and YouTube and all of these things that are going on right now to spread information extremely fast. The first bank that fails and the government does not pay it out, the FDIC does not pay depositors their money, that first bank that fails will cause all of the other healthy banks to fail. Most recently, we saw this happen in Greece. In 2015, Greece had the same problem. And the problem is, they went ahead and limited the amount you can withdraw to $63 is what they were saying back then. And so with that, we already see what would happen. And the government took some steps to fix this or to slow it down, but they're still dealing with problems today. Now, if the FDIC did not pay out one institution and multiple other healthy institutions all of a sudden had the bank run and started to fail, then you'd have a systemic problem where even paying for daily activity, paying for everything that you're normally used to paying for, will become a problem. Because a bank is involved one way or another. Whether or not you use your credit card, a debit card, or any of those things, you still have to pay that credit card at the end of the month. So how long can we go on if banks are failing and then we have a systemic financial collapse with banks in the US? It would not go on for very long, which would end up costing the government far more than paying the FDIC insurance on a couple of the banks that fail. Now we get into talking about too big to fail. Now, one of the problems in 2008 was that we had banks that were too big to fail. We lost Lehman Brothers in that caused a ripple effect throughout the entire system. And now we look and see JP Morgan, Goldman Sachs, Morgan Stanley, Citigroup, Bank of America are considered some of the largest banks that are too big to fail and will cause the same ripple effect. Now, Peter Schiff is a very conservative free market kind of guy, and I really like what he has to say on a lot of these things. And he says we should allow these banks to fail. If they mess up, part of being in a capitalist society is that you got to pay your dues, and if the winners win and the losers lose, you can't keep bailing the losers out. The reality of this is, if a bank like JP Morgan or Goldman Sachs goes under, or Morgan Stanley or any of these, they need to go ahead and let them fail, pay out the depositors the $250,000 that's owed to them, and that's that. If we did that in 2008, we wouldn't have possible future problems coming up soon. But the reality of it is we didn't do that. We didn't let the losers fail. We didn't let this be a free market. We didn't let the free market work. And for that involvement, I did agree with the fact that we should have done TARP myself. But the reality of it is, now I'm realizing we kicked the can down the road and we have a bigger problem that we're going to face. But regardless of how bad that problem is, the FDIC will pay out, or we will see a systemic collapse. A complete and total, absolute systemic collapse. Those are the only two options that are out there. I think that our government's smart enough to print the money and go up to $30 trillion in debt to keep the banks from collapsing. Well, you know what? Let the bad ones fail. Let the depositors get their money back. And let's move on to a better capitalist society. Like, subscribe, Financial Independence 101 out. So I hope you have a little bit of a better understanding of the banking system when it comes to the FDIC, how they pay out, how you can protect yourself and your investments. Like, subscribe, Financial Independence 101 out.